Federal Reserve meets and short-term interest rate markets, they currently see a 1 in 4 chance of the Fed hiking by 25 basis points on Wednesday. Now, a key part of the Fed meeting will be their messaging. Will they, like the Bank of Canada and the Reserve Bank of Australia last week, take a more hawkish stance? If they do, indicating more interest rates to come and more than the market's expecting, remember terminal rates are expecting a peak rate of around 5.29%. So if they indicate higher rates still to come, then that will likely send yields higher and the dollar higher. And you can see when you have both yields and the dollar moving higher, I've got Treasury insurance protected securities here, I've got TIPS as a proxy for real yields. When you see that rising higher, when you see the dollar rising higher, that naturally weakens gold. So if we see hawkish Fed messaging, that would typically send yields higher, send the dollar higher, and that should weaken gold. Could it send gold down to that $1,900 level? Now, looking at the seasonals, there's an interesting seasonal period coming up. June tends to be a bit weaker for gold from a seasonal perspective. And over the last 15 years, from June 14th to July the 2nd, gold prices have fallen on average 60% of the time for a minus 0.58% average return. So will a hawkish Fed send gold lower again in line with its seasonals? Major trade risk, the bigger risk here is to do with the Fed messaging and the US CPI print on Tuesday at 1:30 UK time. A big miss in the CPI print and or a dovish Fed is likely to support gold higher in the near term. Remember, don't just trade it, but Seasonax it.